All right, good morning to everyone who has joined. It's now a minute after 8. I see that we've got nice attendance building, so we're going to go ahead and start the program. Just to remind everybody, we're going to be recording today's session, and following the event, it will be available on BGR's website. So check it out. My name is Hunter Hill. I'm a member of the BGR Board of Directors, Chairman of the Breakfast Briefing Committee. I'm pleased to welcome you to BGR's third virtual breakfast briefing of 2021. BGR is a private, nonprofit, independent research organization dedicated to inform public policymaking and the effective use of public resources for the improvement in the New Orleans metropolitan area. BGR's research, reports, and government monitoring are hallmarks of its public policy work in Jefferson, Orleans, and St. Tammany parishes. Breakfast briefings further BGR's mission by bringing citizens, policymakers, and experts together to discuss issues affecting all of our lives. We encourage you to share this event on social media with others who may be interested. If you do so, please mention @BGRNOLA and use the hashtag BGRbriefing. If you'd like to submit a question for our speakers, you can do so through the Q&A icon at the bottom center of your screen. Just click the icon, type your question in the box that appears, and hit return. We thank you for participating in this event and for staying engaged in public policy discussions important to our community. And we hope to see you again at future BGR breakfast briefings, whether in person or virtual. Here to introduce our topic this morning and then moderate the Q&A portion of this event is Amy Glavinsky, BGR's President and CEO. I'll turn it over to Amy.
Thank you, Hunter. I'd like to first express our gratitude to Iberia Bank First Horizon for so generously sponsoring BGR's breakfast briefing series again this year. Your support allows us to create these free events for citizens. We welcome everyone who has joined us today and encourage you to visit our website, bgr.org, where you can access our report library. It includes more than 200 public policy reports that BGR has produced over the past 25 years. And now for an introduction to today's topic. On Saturday, November 13th, voters across Louisiana will go to the polls to decide 4 constitutional amendments. The first 2 amendments are the subject of our discussion today. Constitutional Amendment number 1 would create a single statewide authority to manage the collection of sales taxes on behalf of state and local governments. Constitutional Amendment number 2 would reduce the maximum rate for individual state income taxes and disconnect Louisiana's tax structure from federal income taxes. It would also activate a number of other statutory changes to individual and corporate rates. While BGR is not preparing a report on these amendments, voters can read about them by visiting the website of the Public Affairs Research Council of Louisiana, also known as PAR. Its website is parlouisiana.org. And to help us better understand how amendments 1 and 2 will affect residents, businesses, and state and local government, we have assembled a panel of experts for this morning's public policy conversation. We will start with Dr. Jen Richardson, who is an economist, tax policy specialist, and a professor emeritus in public administration at LSU. Jen will summarize the amendments and provide historical perspective. Next, we will hear from Kimberly Lewis, the current Secretary of the Louisiana Department of Revenue. Kimberly has served as Secretary since 2016 and will provide perspective on state-level changes. And we will conclude with Michael Hecht, who will talk about the amendment's potential local and regional impacts. Michael is the President and CEO of Greater New Orleans, Inc., the economic development nonprofit that serves the 10-parish region of Southeast Louisiana. Following these prepared remarks, we will have time for questions from the audience, which I will moderate. To all of our panelists, we thank you tremendously for joining us today. I would now like to welcome our first panelist, Dr. Jen Richardson, to join us on the screen. Jen, we are looking forward to your remarks. The breakfast briefing floor is now yours.
Thank you, Amy, very much. It's my pleasure to be here. And I'll first start with a little history, and then we'll go into the details of the 2 amendments. And amendment number 1 is dealing with the sales tax. And remember the sales tax in Louisiana. It is indeed the major revenue source for local governments. It's a major revenue source for the state government. It's been that way for the last 100 years. But what we've done is we've always said the locals will collect their sales taxes, the state will collect its sales taxes. Indeed, until 1990, we had multiple sales tax collection agencies at the local level. In 1990, we said you'd only have one per parish, and then the state would collect it. So we narrowed it down to only 65. We now have about 55 locals. Parishes have decided to combine their efforts collecting the sales tax. So this amendment will say we will create a commission that will collect the sales taxes for everybody. Now, the commission will have 8 members, and there will be 4 locals and 4 state persons. That's what the Constitution, and the constitutional amendment provides certain responsibilities for this commission. The issues that we have right now, and why some people may be hesitant about it, is the commission, in terms of exactly all of its responsibilities, all of its makeup, has not been really created yet by the legislature. But this amendment will tell the legislature, you should create this commission. It will have 8 members. That's what the Constitution says. It will have certain authority in terms of providing tax policy. Will have certain authority in terms of suggesting things and auditing, though exactly what and how is to be defined in a certain extent. So we're going from essentially, now we have the state collecting sales taxes for itself. We have the locals collecting sales taxes. But we also have, for motor vehicles, we have that is collected state and local, going to the Office of Motor Vehicles, because obviously on that one, you don't want all the sales tax dollars going to where the car dealership is placed. You want it to go where the citizen actually lives who buys the car. And then we also have a state and use tax commission that does remote sellers. And that means because we have so many items being sold over the internet now. So right now we have essentially locals, the state, the motor vehicles, and we have the remote sellers. This is going to combine all of those particular functions, and it is then going to distribute the money. And again, it can do this only if the amendment passes, because right now the Constitution only allows 1 per parish, and of course the Office of Motor Vehicles. So that's the issue there. Now, obviously there are a lot of details to be put in that piece of legislation. And this is the thing that may make people wonder, concerned, make them a little bit leery, because the details are yet to be defined. But right now, we know that we have multiple sales tax collectors. That's not the way most states do it. Some states do it like this, but most states do not. So in that sense, we're an outlier. And certainly from a perspective of good tax policy, it would be better to have 1 single tax collector. But again, that is subject to the will of the people. And they get a right to vote on this right now. So that's amendment number 1. And that's a major change in how we collect taxes. It doesn't change the rates, it doesn't change the tax base. It doesn't change any auditing procedures, at least by this amendment itself. But it opens up possibilities, I guess, down the line for changing even the auditing process. So that's amendment number 1, state and local sales tax, use tax. Number 2, next slide. Number 2 is the income tax. Sure, yeah, thank you, Dale. On this one, now this is also something that has a little history with it. Back in 1970, the federal tax deduction was merely a legislative priority. And they took it away because there was a budget problem. And a lot of members of the House and Senate that voted for taking away this particular exemption got defeated. It was then put into the Constitution in 1974. So it became a constitutional mandate that the state could not or had to allow this federal taxes paid as a deduction from your adjusted gross income to get to your Louisiana taxable income. And it's been maintained. And indeed, if you even talked about changing it, it got no place. They put it on the ballot in 2000. It was defeated handedly. So we're now back and say, okay, we're going to make a change now. We want to change it, but we're now doing something a little bit different. We're going to lower a rate. The rates that we have are the maximum rates are in the Constitution. That is 2%, 4%, and 6%. 6% is our highest rate right now. And it is applicable if your taxable income and you're a joint filer is above $50,000. Now, right now, by statute, that has been moved to $100,000, which it can be done. Well, this amendment says what we'll do, we will now say that the federal taxes you pay will not be a deduction. And the reason for that is very simple. We have no control over that. In 2017, when there's a big tax cut, the state benefited. That is, it got extra dollars because one of our deductions fell in value a lot. What meant that your taxable income in Louisiana went up. But we didn't control that. That was something they did on their own. And then at some point, the federal government may raise taxes. And if they do, that's going to be that our deduction that we have put in our Constitution will go up in value, which means that state tax revenues will actually have a diminished tax base. So what they've done, they have said, okay, what we'll do is we'll take away the deduction, but we will make the top rate cannot be above 4.75%. So it's a trade-off, a lower rate, but the base will be larger now. We'll see how that works. The people have to decide because they've done away with the 2%, 4% rates in the Constitution. You only have one, the top rate, 4.75, and it will apply to your taxable income, and you will not have the deduction for federal taxes paid. Those are the two amendments. They're both, obviously, they're something we've talked about for a long time as changes we should make, but now we have to ask the people if they're willing to do it or not. And to talk about all the details of some of these items, I'm going to turn it over to Kimberly, who is our current Secretary of Revenue for the state of Louisiana. Kimberly?
Thank you very much, Dr. Richardson. I appreciate you turning it over to me to talk about the details. And since you were on the income tax, I will go in reverse. I would go in reverse order, but my slides are already in the current order. So I will start with Constitutional Amendment 1. And I will let Marcy share my slides, and we'll go back to sales tax. On the first constitutional amendment on sales tax, as Dr. Richardson said, this is going to change the process we have in place for sales tax collection with the Department of Revenue and with the local sales tax collectors. Right now, the department collects sales tax for both the state and for some of the local governments. We have sales tax collection for certain entities as far as hotel motel taxes, and we collect sales tax for all of the state entities, including in New Orleans, the LSED. The slides. which is the Stadium and Exposition District, a state entity, and the Morial Convention Center, also a state entity, but traditionally viewed to be New Orleans specific. With this change to the local or the state centralized system, we would have a statewide political subdivision with 8 members that would be responsible for collecting all of the sales tax. Now, what we currently have is the state collecting, remitting to those local jurisdictions that we collect on their behalf. This new entity would collect for the state and all the local jurisdictions around the state. There are 63 local jurisdictions that receive a sales tax. Cameron Parish currently does not have a sales tax. You would also have the instance where for remote sellers, which is a commission that was created after the Wayfair decision, that entity would be rolled into this new streamlined sales and use tax commission. It would become the single point of filing and remittance for all the taxes, and they would develop the rules that streamline the audit process. They would also develop all the policy that governs sales tax. Now, one of the things that we as a state get beat up on a lot at the national level is that we have different exemptions and we have different bases. This new commission does not have any authority over our exemptions or our bases. This constitutional amendment does not address those issues. This amendment addresses one factor as it relates to the sales tax, and that is the collection mechanism. That is one of the pieces of opposition that has come up, is that this does not address the entire issue of our sales tax problems. For many years, as Dr. Richardson said, there have been complaints about Louisiana's sales tax system. We're one of only 3 states that doesn't have a centralized collection process. But this gives us that centralized collection process. We are one of a few states that have multiple collectors. This would give us that single collector. We're one of only a few states that allow our local jurisdictions to collect independently. This would no longer be the case, but we would continue to have the different bases, and we would continue to have the myriad of exemptions that currently are in place. Now, what the legislators that worked on this have said, this is the first step. We would continue working on the other issues impacting the state sales tax, state and local sales tax issues. Good first step, one that is a long time in coming, and one that hopefully we will see the voters give serious consideration to when it comes up on November 13th. Next slide, please. And just to give everyone an idea of the impact of the Remote Sellers Commission, since the enactment of mandatory collection by the Remote Sellers Commission in July of 2020, we've seen a full year of collection, and those collections every quarter have exceeded the collections that we've seen since the catalog sales mandatory collection went into place over 20 years ago. So we collected a total of about 55 million in 20 years, and we've exceeded that every single quarter that the Remote Sellers Commission has been in effect with mandatory collections. 63 million in the first quarter of 2021, 87 million in the second quarter, 87 million in the third quarter, and we rounded out the fourth quarter with 94 million in collections. So that's to give you an idea of the impact of online sales from remote sellers just in the last year alone. Next slide, please. The next component of the tax reform package is the Constitutional Amendment number 2, and it is on income tax. As Dr. Richardson said, there are 3 income tax pieces Most people only think about the individual income tax, the corporate income tax. There's also a fiduciary income tax, that's your trust, estates and trusts that also pay the tax. The most important thing to remember is that while we're repealing the federal income tax deduction in the Constitution, this does not change the statutory provision. That's one of the things that some people have pointed out as a shortcoming of this package. It says the legislature may allow for this deduction, so it doesn't outright ban it. That's one of the things that I think both the budget project points out, and I think also PAR mentions the fact that this is only a constitutional change. There is still a statutory provision. The other parts of this are the rate reductions. And then if in fact we get to the point where we reduce the rates, we have the changes that allow for triggers, starting with April of 2024, that we review this annually to make a decision on allowing for a rate reduction. For some taxpayers, it's a great thing. The rates go down, but the implementation of this is going to be a lot of work for the Department of Revenue to calculate annually and determine if in fact the rates change, publish the new rates, change the withholding tables, and for employers, changing those withholding calculations for employees annually if in fact those rates change. So those are some of the things that have to be considered by business and individuals if in fact those economic triggers come into being. So I will let Michael Heck talk some more about the impact on the business community from some of the constitutional amendments being proposed. Michael?
Great, Secretary. Thank you so much for that. And thank you to Dr. Richardson. And thank you to Amy and BGR for hosting us and everybody who's joining us today. I'm going to share the screen and give everybody the economic development perspective on this. And I'm going to actually focus on Constitutional Amendment 2 because from a pure economic development perspective, this is the one that we think would have the biggest impact, while recognizing that there's no question that for businesses, particularly small businesses in the state, that Constitutional Amendment 1 is something that is important to them from a time and money standpoint. The way that we talk about this is that passing Constitutional Amendment 2 would be one small step for changing our tax rates. Again, it would take our personal income tax rate from 6% down to 4.25%, but one giant leap for tax reform. This is going to be set in Louisiana in 2021. You can see this is an image of when we landed on the moon. What I mean by this is that it is a recognition, I guess to quote another NASA thing, that Houston or Baton Rouge, we have a problem. And that is that right now, our tax system gives us the worst of both worlds. And what I mean by that is that we look expensive because if you look at our top tax rate, we are number 19th highest in the country, but actually we are one of the cheapest. We collect the 9th least amount of taxes. So it's the worst of both worlds. We look expensive, but we actually are cheap. That doesn't make sense. And Constitutional Amendment would go towards rectifying that. And so in general, when I talk about my pitch on this, I say it's pretty straightforward. If you like lower taxes, more jobs, and greater fiscal stability, then people should support Constitutional Amendment 2. And the lower taxes is basically because the top rate will be dropped from 6 to 4.25% for individuals. And for 93% of individuals in Louisiana, according to the Legislative Fiscal Office, they'll actually pay less in overall taxes. It's more jobs, and I'm going to get into this. It's basically that companies, and particularly CEOs, flock to states with lower income tax rates. And I'll give you some empirical proof of that. And more fiscal stability, both the Secretary and Dr. Richardson covered this. Basically, we want to get off the tax roller coaster. Only us in Alabama are on it, and it doesn't make sense to be tied to what happens in DC. So here's the proof that I wanted to go through. To use this, I wanted to thank our kind neighbor to the west, Texas, for letting us dissect them a little bit. But the basic deal is that if you look at Texas in terms of overall taxes, we're very close to what Texas charges in overall state and local taxes on a per capita basis, within about 3%. But here's the key thing. Louisiana has a personal income tax and Texas does not. They're zero. On the other hand, property tax, Texas is about double. That really is the swap. In Texas, there's no income tax, but there's double property tax, and that's the major difference. In terms of sales tax, there is a smaller sales tax collection in Texas, but not enough to really affect decisions. And as you can see, overall, it's about the same. So what's the benefit of this? And what I'm going to show you is maybe correlation, not causation, but I think the correlation is pretty compelling. First of all, you can look at overall GDP. Here, we're going back for the past 20 years. And while I do have to give credit to the John Bell Edwards administration, you can see that in recent years, our GDP has been going back up. Going back for 20 years, you can see that Texas has grown at about 28%. We've grown at less than half of that, at 12%. Again, correlation or causation, I think that it's certainly correlation, and I think that there's some degree of causation. Now, this next slide is actually good news, because if you look at Fortune 500 companies, we've actually beat Texas going back for the past 20 years. Texas has only managed to grow from 43%, from 43 Fortune 500 companies to 50, whereas we've grown 100% from 1 to 2. So they've only managed 16%, we've managed 100%. Obviously, I'm kidding. We have very few Fortune 500 companies in Louisiana. Texas continues to attract them. And again, I would argue that the zero corporate income tax rate and a personal income tax rate is a major part of that. And I think here's the most significant thing to look at. This chart actually goes back another 20 years. This goes back to 1980. And this is population. Basically, people follow jobs. And when you have increasing population, you're in a virtuous cycle of more taxpayers, regardless of tax rate. That gives you more funds to invest in things like schools and roads and hospitals. And it engenders a virtuous cycle of people coming and companies coming because the investment has created better conditions. So you can see that Texas has grown over the past 40 years over 100%. Louisiana has only grown marginally, about 10%. And then here, I think, is the best piece of empirical proof, regardless of what the numbers say and the US Census says and our economists, our esteemed economists say. This is a ranking that U-Haul does, where they basically see how people are voting, not with their feet, but with their fleet. They look at where people are taking one-way U-Haul trips around the country. That means where people are moving. And if you look at the 2020 rankings, this was during COVID, you can see that Tennessee, Texas, and Florida, surrounding states of ours, are all 1, 2, and 3. What do they have in common? Zero income tax rates. Louisiana down there, we're at number 44 for where people were moving. We're at 6%. And the bottom, the state where people were fleeing, was California with 13.3%. And so my belief on this is that we want to do this, Constitutional Amendment 2. It's not going to get us to zero, obviously. It's a small step, as we said before, but it is a giant leap because, one, it's moving us in the right direction. And two, if you actually look at the numbers, this would take us to being lowest in the South in terms of income tax rate and fourth lowest in the country amongst those states that actually do charge income tax. And my belief in terms of economic development, which is about creating jobs and opportunity for our citizens and our children and our grandchildren, this would be significant. I'll end it there. Turn it back over to you, Amy. Thank you.
Thanks, Michael. Kimberly and Jim, I'd like to invite you to rejoin us on the screen. Consistent with BGR tradition, it's now time for audience Q&A. And we've received some questions in advance, but for those of you in attendance, if you would still like to submit a question, I'd like to remind you that you're able to do so by accessing the Q&A icon in the bottom center of your screen, typing your question and hitting return, and we will then consider it on our end. So with that said, we certainly have had some questions coming in during the course of that discussion, and I'd like to begin. I will attempt to direct these to a single panelist to start the responses, but certainly to all three of you, please feel free to offer your responses. Okay, so Our first question, and Michael, I think this one is actually best suited for you. Do you think these tax changes will result in meaningful additional business investment and employment in Louisiana? And because I think we can anticipate your answer to that, could you also sort of support it with evidence or the actual factual basis for your opinion?
Yeah, and so the answer obviously, I believe, is yes. The factual basis, you can look at the overall economic data that I just presented, but I'll give you just one very brief anecdote. There's a gentleman from Louisiana, a 2006 college graduate, who sold his company for almost $1 billion to Amazon 3 years ago. He's now going to be leaving San Francisco. I thought he'd be coming back here to our region. He has a home in Kenner and a home in New Orleans. And I said to him, well, are you coming back home to New Orleans to be the Mark Cuban of New Orleans? And he said, no, I'm probably going to go to Vegas or to Austin. And I said, why? And he said, well, because there's no income tax. And I said, well, yeah, but no offense, you know, you're a skajillionaire right now. Is this really going to affect your quality of life? And he said, no, you're right. State income tax isn't really going to impact me. But all my friends are going to those places with no income tax, like Nevada and Texas. So I want to be with my friends. And that really hammered home the virtuous cycle of having an income tax rate that attracts CEOs and entrepreneurs, because it does develop its own momentum. And I think, again, looking at the population trends and the in-migration of the states around us with very attractive income tax rates, that's the proof in the pudding.
Thank you for that. We've got another question that has come in that I think actually balances this discussion well, and this audience member is asking you to synthesize or summarize the opposition to each of the amendments. So while we've heard reasons for support, it's certainly important to understand where there are concerns about passage, what those concerns are. I think on amendment number 1, Jim, I'd like to hear from you first, and then Kimberly, and Michael, I'll come to you for the answer on amendment number 2.
For amendment number 1, I think which is on the sales tax collection amendment, I think that the general nature is we would like to have a single sales tax collector is good. I think the issue, as Kimberly pointed out in her remarks, there are a lot of questions that are not resolved at all, such as the fact of a common tax base. Most states have that, we do not. Most states do not use the sales tax at the local level like we do. They use the ad valorem tax at the local level. That's why if you looked at Michael's charts, you saw the ad valorem tax in Texas being much higher than what we have here. And then I think the other element is the issue of auditing is a legal issue. Businesses would like to have a single audit. Local governments want to have their own audits. All that's not resolved. So, and then the other element is this commission has not really been created yet. It's merely can be created, and it's up to the legislature to decree it then. So you have a lot of questions that local governments would have. I'm not sure what's going to happen to my revenue, because remember, the sales tax is the major revenue source for school boards, for parishes, municipalities, and so on. So it's important they know where the money's coming from. So no, there are a number of questions yet to be resolved on that one.
Kimberly, would you like to add to that response?
I think Dr. Richardson covered everything. The main issue for some of the local governments is making sure that the revenue is there when they expect it to be there. Having it go to another body first and have to be distributed back to them is one of the primary concerns from local governments about this new entity, and understanding the details about how the new entity will work and interact with the local governments. Right now, they are comfortable with how everything works. Money comes to them at the local level, they collect it, they know their local businesses and do the audits at the local level. And having all of that change to a body that does not answer to the local residents is a concern for them.
Thank you. And Michael, can you speak to just the basis or source of opposition to amendment number 2?
Sure, thanks, Amy. I'll try to channel Jan Moeller from the Louisiana Budget Project on this, who's always a really articulate analyst of these issues. I think Jan would say that there's two major problems with the Louisiana tax structure. He'd say that it doesn't collect enough taxes to provide for basic services and invest in our schools. And the second thing is that he would say it's regressive, particularly our sales tax, which is one of the highest in the country. And I think his criticism of Amendment 2, although he would say that decoupling us from federal taxes is very smart, he would say that this doesn't fundamentally address either of his two criticisms. Constitutional Amendment 2 is structured to be revenue neutral for the state, and so it's not raising new revenues. So it's not addressing his first concern. And the second is that it doesn't address sales tax. It addresses income tax. So it's not addressing the regressivity that he's concerned about with sales tax. Although I would say that federal deductibility is essentially a regressive deduction because it's really something that middle and lower income families don't take advantage of. They don't have the federal taxes to deduct. So this is getting rid of a regressive deduction. But those are the two main concerns. It doesn't raise new revenue and it doesn't address sales taxes.
Thank you. And we have heard a bit about the concern for what's termed local control. So, and we heard you reference it, two of our panelists reference it just now. Are there ideas or ways to address or mitigate that concern that are already being contemplated? Kimberly, can you respond to that one?
So I think the makeup of the panel with equal representation with the primary local jurisdictions having representation, the sheriffs, the school boards, the police jury, those are the collectors currently. They are, I think when Dr. Richardson was going through his presentation, he talked about who collects the local sales tax currently. So having those bodies be the representatives appointed to that entity, they will have a voice in establishing the framework for the new collection mechanism. That will give locals a say in how this works, how the structure is created, and making sure that technology drives anything that this entity does. When you have technology in place, you ensure that the collections come in timely and the revenue is distributed to the local collectors in a timely manner. That's one of the things that we made sure we did with the Remote Sellers Commission, have the technology for electronic filing and the funds remitted to the local governments in a timely manner. So I think using that model, that gives or will give local collectors a bit more control over how this works. And again, the locals do have 4 of the 8 seats to determine how this works going forward.
And you might add that, Kimberly, I believe it's a 2/3 vote of that commission for any major rule changes, right?
It is a 2/3 vote for creating the initial work of the commission and for any rule changes of the commission going forward. The legislation to pass what ultimately becomes the details of the commission is a 2/3 vote. So this is not just someone can change it by majority vote in the future. The locals do have this. This is something that they will always have a voice and a say in.
And 2/3 of 8, I believe, is 5.3 votes.
So it's 6.
Yeah, it's 6, really, 75% really.
Thank you. That's helpful. So we have an audience member who's asking, and Kimberly, I think this one is probably best directed to you in the first instance. How would local governments that had served as sales tax collectors deal with the revenue loss from no longer receiving tax collection fees?
Well, I think that that's one of the details to be addressed in the future. It's not clear that the local governments won't receive fees going forward. So for example, under the Remote Sellers Commission, when those funds go to the local collector right now, they still receive their fees on those. So the commission collects from the remote sellers, but those funds go through the normal local distribution process. If the local school board is the collector, the commission sends those funds to that local school board for distribution to that parish level. The commission is not set up to distribute to each of the local collectors in a parish. So if that is still the case, that the single collector in that parish would be the entity that distributes to all of the different local sales tax bodies within that parish, which is what Dr. Richardson mentioned happened in 1990. We went from all of the different sales tax entities within a parish to a single collector. That single collector may still receive their collection fee for the work they do at that level. So that is one of the details that have to be worked out as this moves through the process, assuming the constitutional amendment passes. When that 8-member body gets together, they have to work through those details of how the local collector that currently exists would be compensated for whatever work they have to do going forward.
Would anyone like to add to that?
She covered
Okay.
it very nicely.
Okay, all right, thank you. Okay, so we have an audience member who I think is questioning sort of the sequence of information that's being presented in a very practical way. They're asking realistically, if you ever wanted to reform and unify sales tax bases, wouldn't you have to start with some type of joint commission? I'm curious about your response to that.
Would you say it again, Amy, the last part of your question?
So I'll read it in its entirety. Realistically, if you ever wanted to reform and unify the sales tax base, wouldn't you have started, or wouldn't you have to start with some type of joint commission? I think the implied question is the sequence of events here in terms of what's being presented to voters and what's already been developed, and why is it unfolding in this way?
I think if you're really going to reform the sales tax issue at first, I mean, ideally you would have a common tax base. We don't have that. We worked on that one, and that's a long process. Let me tell you, a very long process to do. I think secondly, one of the weaknesses, it would be very nice to have all the details of the commission before you voted on it. That, certainly, many people are going to ask that. It's a very legitimate question, I think. What are all the details to be out there? That's it, because we really don't know. I would think that would be the ideal part. Now, obviously, the legislature tried its best to accommodate that percent. Okay, it's going to take a 2/3 vote as we could create the commission. Now, that may not be satisfying to some people, saying, I want to see all the details before I vote on this.
Thank you. All right, we've got to give me one moment to sort through. So here we have an audience member asking, why should we reduce income tax rates while doing nothing to lower Louisiana's sales tax rates? Sales taxes are particularly regressive, and Louisiana has some of the highest rates in the country. Michael, I think I'll hand this one to you first. It ties in with your remarks earlier.
Yeah, thanks, Amy. I think it's that the problem with that kind of this question is that it assumes that it's an either or. I think that they are both challenges in our state. From an economic development perspective, I'm very confident that making our tax rate more reflect or better reflect the actual taxes collected will make us more attractive to businesses, and that will lead to more jobs and more opportunities, and ultimately more revenues for the state while not increasing taxes. Addressing sales tax, I think, is a separate issue that should be addressed, while noting still that in our current sales tax code, that essentials like food and medicine are not taxed, and so they are not part of this regressivity discussion. But yeah, I think treating this as an either or is just not the right way to look at it. Fundamentally, making our tax structure more attractive and more accurate in terms of how it reflects what's collected will increase us from being in the 40s in terms of best tax rate up into the 30s by the Tax Foundation. That'll put us higher on the rankings for site selectors and CEOs. And if you look at the Texas numbers, I think empirically it shows that over time it'll work for Louisiana.
I would like to add to that if I can. I think the question has a lot of merit, because remember, we talk about the sales tax, we think about it, only you or I are paying this. but businesses pay that sales tax too. And it's a fairly high rate. If you're a business coming to Louisiana and you see that one of your tax rates is 9.5% on state and local sales taxes, that's a large number. So it certainly can serve as a deterrent in terms of people even looking here. Should I put my business here? Particularly if I'm going to buy a lot of stuff that may be taxable at the state and local level. So I think, again, we have made choices over a long period of time that the sales tax is going to be the tax at the local level and the state level. It's a high rate.
And Jim, if I could just add to something to that, when you look at us versus Texas, and again, I would go to the mat saying Texas has a structure that's more constructive over time in terms of public education and infrastructure. Not only does Texas have no income tax, they actually do charge about 20 to 25% less in terms of sales tax. But what's the difference there? It's that they've got double the property tax, the ad valorem tax. And so if we really wanted to get to a place of lower income taxes and also having lower sales taxes, then clearly that would have to be made up by something that looked more like local or even possibly state ad valorem or property taxes.
Yeah, I would agree with you, Mike, on that. We have decided for a long time not to use ad valorem tax, or not use it very much, and that means we're down to either income or sales.
That's the essence of the issue.
Alternatives. That's what we have to do, and people have not been willing to go to the ad valorem tax. That's that. Now, I think the other element to remember about Texas, they don't have a personal income tax. They do have a gross margins tax on businesses, though, which is pretty close to a corporate income tax, though they have somehow wiggled around that and said it's not, because that wouldn't be constitutional in Texas.
They're better at hiding it than us.
It's an income tax.
Kimberly, do you want to enter the rink on this one?
Well, I think it's interesting that the two of them are arguing about what Texas does and doesn't have. And Michael, Louisiana's state tax is lower than Texas. Texas is 6.25, we're at 4.45. The difference is the cap they have in place on their local sales tax at 2%. So that has an impact. Right. We don't have that. They have the local property tax that funds their schools. And because that is not sufficient to fund their schools, as Jim said, they have the Texas margins tax to make up the difference for funding schools. In essence, a corporate income tax. And our Supreme Court has said it's an income tax. Their Supreme Court says it's not, because their Constitution says they can have an income tax. Brings in a large amount of revenue in the state of Texas. So we do have a lot of trade-offs between the revenue we collect and the revenue that they collect. Well, there's no individual income tax. They are collecting the same amount of revenue from their citizens, actually a bit more revenue from their citizens than we are in that regard. So on a per capita basis, you're paying more in tax as an individual in Texas than you are in Louisiana. So there are some trade-offs.
Okay.
I'm going to add one on amendment number 2. It seems to me the issue there is, do we want to leave the federal tax deduction in? Because it's something we don't control. It adds variability to our tax base, and we have no ability to control it. The only element you could say you don't like about that amendment, as I think Michael was quoting Jan about, they put a top rate in of 4.75 in the Constitution, but there are no lower rates in the Constitution, which means that technically, I don't think this would ever happen. Technically, they could raise the rate on lower income people up to 4.75. They couldn't do that right now, but that's not going to happen. I wouldn't be much concerned about that, but I guess it's a possibility.
So I have a related question, Jim, that I'd like you to clarify. So I have an audience member asking, would discontinuing the federal income tax deduction counterbalance the effect of lowering the maximum rate? Can you explain that?
Would continuing or discontinuing?
Discontinuing. So I think this is speaking to the revenue neutrality and seeking to understand sort of the practical effect of the decoupling and the lowering of the maximum rate. Can one of you just sort of explain that?
Well, I think one of the things the legislature did coming up the rates and everything, is they wanted to make sure that no one got significantly harmed in terms of higher taxes by this new system compared to what they were paying. And I think the fiscal office went through a lot of iterations in trying to figure out, okay, what happens to a person earning 35,000? What happens to a person earning 50,000? What happens to a person earning 75,000 and so on? To say, okay, if we change the system, will they see their income tax bill go up or down? And I think they really tried their best to keep it as neutral for each taxpayer as possible. And I think, as Kimberly was saying, at least I believe about, they think 90% of the people get a slightly lower tax bill.
It's been calculated by the Legislative Fiscal Office according to every single type of taxpayer and whether they itemize or don't itemize. And yeah, it looks like 92 to 93% of Louisiana taxpayers will pay less individually, but overall it will be revenue neutral.
So Michael, for our audience members who want to dig a little deeper into this, because I have some other questions, where can they access that calculation?
On the Legislative Fiscal Office website, if you go there, you'll be able to find it, or you can also just email you or me and I can send it to you as a PDF.
Thank you. Okay, so here's a question I wanted to get to before we run out of time. Kimberly, in what ways might the centralized sales tax collection actually improve collection rates and produce more revenue for local government? So that presumes that it will. So can you respond to that first, letting us know if that presumption is correct, and then if so, why?
So ease of compliance has a way of improving collections. If it is easier for a taxpayer to comply, meaning they only have to file a single return with a single entity, that has a way of improving collections. As opposed to the current mechanism where taxpayers that do business in multiple parishes have to file multiple returns. This process of a single streamlined sales tax collection commission, the idea is to have the commission collect sales tax on behalf of all sales tax collecting bodies. So instead of filing a state return and then a local sales tax return in all of the parishes, if you are business that is located in New Orleans and you do business in New Orleans, Jefferson, and all over the North Shore, you no longer have to file, say, 6 different returns. You'd be filing a single return. The commission presumably would have electronic filing, so you would be able to go to a website and file that single return. And the capability to remit that single payment, file that single return, input your information, or your system would communicate with that system. You don't have to have the staff that needs to keep up with the rates in all of the 6 different jurisdictions that you're doing business in. There's a lookup tool that gives you the information for where you're selling to, and it makes your life much easier. That improves compliance. Right now, there are some small businesses that if they expand to sell into other areas, they make a decision, I don't want to know what the sales tax is or what I need to collect somewhere else. I'm going to continue either collecting at my home office and remitting all the tax there, or I'm just not going to try to collect in the other jurisdiction. I'm going to say it's an out-of-state sale and I don't have to collect it, and so I'm not going to comply. If it's easy to do it, people will comply. The same with the increase in collections we've seen from remote sellers. If it's easy for a small business to use the technology, they don't have to invest in the additional technology. It's there for them. They will comply and collect and charge the additional tax and remit it to that entity. The key is easy.
Okay. All right. So here's another question. The COVID-19 pandemic and the Great Recession before that have proved the necessity to have state revenues that can provide residents with critical services during rough times. How can we build sufficient revenues if income tax rates decline? Jen, why don't we start with you on that one?
Well, I think the issue is that you expand the base, which is what's happening in this situation. They're expanding the base, they're lowering the rates. They're not really lowering the income. Now, in either case, the income taxes will grow if the economy grows. So if the economy is having a recession, having a dip in it, income tax numbers may not change. Now, the interesting thing is what happened in this situation. The income taxes grew because our base grew. Why did our base grow? Because the federal income taxes declined because of the tax cut of 2017. So we had a big increase in income tax collections because of that change in the federal taxes. Now, like we said, the problem is that can go either way. In 2017, it helped us. But if they raise taxes, and at some point they may, then it's going to affect us the other way. So we benefited from the definition of our tax base in the last 4 years. But we can't guarantee that's going to be forever. So this is why I get out of that particular, we can take away that particular deduction, we can lower the rates, and then we depend on our own growth to keep going. And obviously, if there's a recession, we may lose them. Our income tax revenues may fall a little bit, but then they will rise as the economy recovers. So there's no tax. If the economy goes into a big recession, there's almost no tax that is going to be guaranteed to give you a certain revenue level.
Thank you. So we are very close to being out of time. There's a question that's come in that I think is a very practical place for us to end. So I'm going to pose it, and I would like each of you to answer. And Michael, we'll start with you and then go to Kimberly and then go to Jim. This audience member is observing. This all sounds very technical. In a nutshell, why should citizens pay attention to and vote on these amendments? So let's bring it down to a practical level for those who want to understand why are we having this discussion and why is their vote on these amendments important. Michael?
Both of these amendments are a movement towards simplicity, fairness, and ultimately growth.
Kimberly?
They should pay attention because taxes affect everyone. When you go into any store, how much you pay in sales tax impacts you. Your income tax, if you're an employee or an employer, the income tax you pay affects you. You should pay attention whenever there's a tax measure on the ballot.
And Jim, what would you like to add?
I would add tax reform people or tax experts have talked about these two changes since the 1980s. Should we have a central sales tax collection process? Should we have the federal deduction in our income tax? And each time the experts say you really should have a centralized sales tax collection process, and the experts say you really should get rid of this particular tax, the federal taxes as a deduction. That's what the experts said, but it's up to the people to decide if they want that or not.
Thank you. So we are now out of time. To our panelists, thank you tremendously for joining us today for this important conversation, for your donation of time and thought on behalf of BGR and our audience. Thank you.
Great.
Thank
you for the opportunity.
Bye now.
Bye. On behalf of BGR, I'd like to say thanks again to Iberia Bank and First Horizon for its generous sponsorship of this breakfast briefing series. And to all of you for being with us today. As a reminder, we have a recording of this event. It will be hosted on our website, bgr.org. The best way to stay on top of all BGR events and research is to become a member. We regularly engage with our members and we value this dialogue tremendously. We also rely on our members to help amplify BGR's public policy recommendations. So if you're not currently a member, please visit bgr.org to join the ranks of concerned citizens working to improve local government. We hope this event has been informative. We thank you again for joining us, and we look forward to seeing all of you at BGR's next event.
Take care. Thank you.
Thank you, guys.